So let me start. So first, welcome to everyone, especially those that are visiting from outside the PACE community. And I'd like to especially thank Professor Thomas Failure for bringing his Marketing 431 New Product Development class. I'm Bruce Bachenheimer. I'm a clinical professor of management here at PACE and the director of the Entrepreneurship Lab, the organization that's putting on the event today. The Entrepreneurship Lab is right across the street at 163 William Street on the third floor. It's a collaborative workspace designed to bring together students from PACE's 6 schools and colleges to promote collaborative problem solving and help develop an entrepreneurial mindset for our students. We have a lot of different resources there from the staff, some with great technical background, writing and business backgrounds that could help students. We have resources like high-end computers, an Alienware computer to do 3D modeling, a 3D printer, poster-sized color laser printers, a bunch of PCs and Macs, a studio if you want to produce a video, some collaborative workspaces, conference tables. So I'd encourage you to come visit the lab. There's information on the cover. The address, the URL is pace.edu/elab, E-L-A-B. So if I also could encourage people take some questions via Twitter and via standard microphone in real life, but we're using we're at Pace eLab. So if you would send something to Twitter at Pace eLab, or if you want to use the the hashtag ENT Roundtable for Entrepreneurs Roundtable. So what I'd like to do to start is just to begin by introducing the panel. And what's I think really neat about the panel is not that we have 3 entrepreneurs and a person from the finance world who also has a operational, managerial, and entrepreneurial background, but the 3 entrepreneurs are all PACE alums. And as a point of note, I'm also a PACE alum. I graduated with an undergraduate degree in international management. I think I was among the first people to get in the international management degree back in 1983. So I think one of the reasons to bring PACE alumni to these events is to show that idea of the perception of feasibility. If they were able to do that, I could do that. And the other thing that's nice is not only that they're PACE alumni entrepreneurs and successful, but we have them at 3 very different stages. So to start with, and I'm going in alphabetical order, not the order that they're sitting in, David Arabov, David, if you'd raise your hand, is a co-founder of Elite Daily. He started the site last year while he was a student here on the New York City campus, finishing his undergraduate degree, to be the voice of Generation Y. The site now reaches over 40 million people a month, 40 million unique visitors a month. The company has a staff of 37 full-time employees, all within the age of 19 to 26, and more than 200 contributors around the world. So again, it's elitedaily.com, and just a phenomenal growth in the last year. Second person, Lenny, co-founded bedroomfurniturediscounts.com in 2010 as the e-commerce portion of UnlimitedFurnitureGroup, and that has grown to $8 million in revenue in just 3 years. And one thing I forgot to mention, both of these first 2 startups, Elite Daily and bedroomfurniturediscounts.com, are started by multiple PACE alums. So there was 2 PACE alums co-founding each of them. Craig Tashman co-founded LiquidText. I'm sorry, Craig, I'm not pointing to people. Lenny on the end, Craig in the middle. And I guess you have name tags in front, so everyone can see who you are. Craig started LiquidText.net in 2012, a young startup. LiquidText is a multi-touch document manipulation system that gives students and knowledge worker, better ways to annotate, navigate, and visualize and understand long, complicated documents. Craig is an alum of PACE from the Dyson College of Arts and Sciences on the Pleasantville campus. For those that may be visiting, we have campuses both here in New York City and up in Westchester County. Craig went on after he did his BS in physics to earn a Master's of Science degree in computer science from RPI, and then did his PhD at Georgia Tech. And I guess a way to describe it is like the Minority Report. He gave a demo, and if you go to liquidtext.net, you could see a demo of the software. It's really neat. You take text and just manipulate it as though it's liquid. It's really, really interesting. So, and then rounding out the panel, Carlos Flores is from Golden Seeds. I spoke at an event at Golden Seeds and met Carlos, and he came to the lab and volunteered his time as a mentor to help. And I thought it would be great to have an active early stage investor who has real operational experience be part of the panel. Carlos is not an alum of PACE. He went to Stevens for undergraduate and graduate and did your MBA was it Kellogg? At Kellogg. Carlos invests in early stage technology-oriented ventures as a managing director of Golden Seeds Angel and Venture Capital Investment Group, the third most active angel and group in the United States, with nearly 300 members, having invested $58 million to date in 58 companies. So that's the panel. With my brief introduction, what I'd like them to do, if I could, before we get into specific questions, is just give more of a self-introduction, a little bit about themselves, their journey to entrepreneurship, a bit of their background and as I said, journey to their company, and then just a little bit more introduction of their company. So if I could start at this side with Lenny.
Can you guys hear me? First, I want to say it's a great pleasure to be here. It's a nice homecoming for me to be able to come back to where I went to school, and I'm excited. The way I started my business, I don't want to take too much time, so the quick story, it's a story about failure. And I think that's what entrepreneurship is. I started a furniture company, grew. We sold retail first, had a bunch of stores, and those went out of business. Then we wanted to do a wholesale business, tried that. That went out of business. And now we scaled back one furniture store, and we have a huge e-commerce platform. We sell furniture that's driven by technology. And that's the story in 30 seconds.
That was actually really quick, and you got the point across really
Lenny,
well.
there's also after PACE, Lenny went to do his MBA at Columbia Business School, and so there was quite another thing. And again, his partner Sarah is also a PACE alum, who after PACE went on to do her law degree at Pennsylvania, University of Pennsylvania. And Lenny is also, as the others are on the table, alumni mentors at the Entrepreneurship Lab. So if you go to pace.edu/elab and see them, if you come to the lab and are working, we're glad to put you in touch with a number of people, including the alumni mentors. So thank you, Lenny. Let's go to Craig.
So LiquidText is really kind of a classic story of technology transfer, right? So LiquidText started out at Georgia Tech when I was doing my doctorate in studying why reading is hard. Why is it hard to read long, complicated documents? And so we did all this basic research and started coming up with these really profound and unusual answers to the question. And so we started building software to try to test this out. And as we were running our studies, people started asking, gosh, this is really exciting. This is really transformative. Can I get a copy of this? And after enough times of this, I realized, I think the answer should be yes rather than no. And it started going really well. And so when I graduated in 2012, I brought on a co-founder and said, we have to actually build a product of this and bring it to market. And so we're definitely the earliest stage company at the table. We're in the process of putting together our first product now. We've raised a little bit of money, and mainly we're putting together the product, detailing out the business plan and things like that.
Okay, great. David?
So my name's David, 23 years old, graduated in May 2012. So not too long ago. I was a PACE student, just like most of you are. Started a company called Elite Daily. If you guys have Facebook, you guys have definitely seen it in your feed. And started with a buddy of mine that went to PACE as well, though I don't think he graduated. But when we started, it was just really to solve the issue of, hey, content online is quite traditional. You know, you have the CNNs of the world, the New York Times, Huffington Post, but you didn't really have anything at the time that was a content platform for this demographic, by this demographic, and who knows it better than the people within the demographic. So when we started, I mean, no media background, no journalism background, no English background or anything like that. I'm actually ESL. So when we started, it was just really one of those kind of passion projects of, hey, even if me and you are the only two people reading this, at least we know it's content we'll like. And then out of nowhere, it just really started taking off, you know, from working in my apartment and having class at night to getting an office and then, you know, building up our team. We started the company with only $60,000. So in a way, we were bootstrapped and really had to grow from that. And right now doing over 40 million uniques a month and, yeah, having fun. That's really what it's all about.
Good, thanks. And Carlos, tell us, because you've done quite a few things and have like me, a little more age over some of the our entrepreneurship panels. So tell us a little bit about your background and what brought you to Golden Seeds and what you're doing now at Golden Seeds.
Okay. Let me tell you a little bit more about the Golden Seeds first, okay?
Okay.
350 members, as Bruce mentioned. We have 3 offices in New York City, Silicon Valley, and Dallas. We invest basically on Series A type of investments alongside life sciences, high tech, and consumer products. We like to see as part of the senior team at least one female with significant equity. That means anything above 10%. So we encourage women to apply, startup companies.
I'm sorry, I may not have mentioned, or for those that don't know, Golden Seeds has a particular interest in women-led, women-owned businesses.
Right.
That's what makes them different and unique than a lot of other angel groups. If you could hold the microphone just a little closer. Thanks.
Okay. What else? In terms of investments, I think Bruce said it, about 55 companies over the last 7 years, total of $50 million. That comes to an average of about $1 million in investment. We also do follow-on rounds. That means as the company grows, like, we have a venture fund in the order of about $35 million that allows us to invest in companies as they grow and also co-invest with VC companies. What else? As far as my background, I started my career at AT&T Bell Labs. I was a research scientist in photonics, optical computers, fiber optics. Then I went to Kellogg for MBA, joined Booz Allen Hamilton, which is a large management consulting firm. Left there as an associate partner. Went to Roland Berger, which is the sort of McKinsey of Europe. Was head of a telecom and media practice there. And then I decided to become an entrepreneur. I went to Brazil, started a couple of companies, lost a ton of money there of my own. And I believe you learn a lot of more from your mistakes than your successes. Came back, joined Golden Seeds as an angel investor, and here we are. I've been there for about 1.5 years, and happy to always see new entrepreneurs with great ideas coming our way. So if you have anything else, any ventures in your mind, we can talk about it.
Okay, great. And for those that attended the first session with Gurbash, when he talked about VCs not really knowing, not adding value because they don't really know business, they just have a degree from a fancy university. One thing you want to look at when you get money is what they call smart money that could help, and having someone with that kind of operational background, is quite helpful. So let me start I'll ask a few questions, and then if anybody would like to tweet a question in, if you just send it to @PaceELab, and if you don't have a program, we'll be glad to distribute some. That has the URL, the Twitter handle, as well as everybody's names. And then I'll read from them, and we will open it up as well. But let me start with Craig, as you're one of the newest companies, that doesn't have. I don't believe you have any commercial sales yet, correct?
No, we're still just building out the first shipping product.
Good. Good. So I wanted to not good. Sorry, I meant good that I'm not mistaken. I hate for you to say no. We've sold a lot, but I wanted to start with the earliest stage business. Looking ahead, what do you see as some of your biggest challenges to get traction? To get the product out the door, revenue in the door, et cetera.
Yeah. So I'd say in our case, to understand the challenges, I need to say just a little bit more about our business. So we're building a product that we're going to be selling direct to end users, direct to consumers on one end, and also to high-value content providers like Bloomberg, like Pearson Publishing, and places like that on the other end. Both of these groups have really unique challenges. If you try selling something to companies like Bloomberg, Pearson, McGraw-Hill, Macmillan, gosh, you may as well just jump out a window. I mean, it's almost impossible. If you're a startup trying to sell things to existing businesses, and I'm sure everyone else at the table has probably seen this, I'm sure you have, especially with furniture, it's really hard to sell things to large, bureaucratic, slow-moving companies. The sales cycles take forever. The amount of networking you have to do just to get in front of the relevant people is actually a major challenge right there. Now, on the other side, in terms of selling to consumers, in some ways, that's easier, right? In some ways, it's not that hard to get something really exciting to start getting traction from consumers, but actually making money off of those consumers is very challenging. It's almost like it's easy to get consumer users, it's hard to monetize them. And so figuring out how do we make money off of these people, if our early tests are right and people really do adopt it, there's a lot of big challenges there, especially in terms of market saturation. Our main product for consumers is going to be an app. And even though our app is unique and wonderful and special and amazing, the market is saturating really quickly. And even taking something special and making it stand out raises a lot of very serious marketing challenges.
Okay. And, that'll one thing about being an entrepreneur is that persistence, taking no and following up and, trying to get your foot in the door and get that appointment to make your case. So I moved on to David. What surprised you most about the growth this past year? So Craig is just starting the program. You started last year. Phenomenal growth. Congratulations. We're all proud, waving the base flag for us. What surprised you the most about that growth?
The most surprising thing, I would say, is, it's execution's everything. And obviously, when you're going out there to build a product, you can have the best idea in the world, but the execution is going to be everything. And what we've learned through time is to execute, you need a great team. So during this rapid growth, obviously we had a team to start out, and you constantly keep building that team, and you take away certain parts and you add certain parts. So the biggest surprise was just really when we were sitting there and we're like, all right, well, here's our formula, here's what we have to be doing. Is our team capable enough to do it? If not, do we need to get rid of people? And obviously, it's never an easy thing to do. It's just really the little things all coming together. And the biggest surprise is that, we were a bunch of young guys that most of the people on our team don't have experience in the media world, journalism world. So for us, it was surprising to ourselves that we were able to pull something off of this nature by just working hard and, executing. And that's really what it comes down to, execution.
So executing, doing it, ideas are a dime a dozen. Making it happen is what's hard. So, I'd suggest not, being too worried about protecting your idea, but get out there and make it happen. And just, I really didn't introduce my background. Aside from being a professor, I'm not a traditional academic. I started a couple companies, a online financial services company back in the 90s, .com boom, and a traditional company, Annapolis Maritime Corp. In Annapolis. Started my career after Pace. I studied actually Japanese here at Pace and started at Bank of Tokyo and then an Australian bank, and went on to work for a high-tech startup company as an international product manager in 26 countries, and did a bunch of other stuff. Took off and went sailing for a few years. So I have an academic background to a degree, but more of an entrepreneurial background. Good. Carlos, you've seen the operational side, and you've been in management consulting and have a technical background. When you are looking at at companies and they come to pitch for funding, I know it's a very broad question, but what are some of the key things that you look for that get your attention, both on the plus side, like this is good, and on the negative side, here's some red flags, I don't want to touch this with a 10-foot pole?
Okay, that's an excellent question. It depends, or first of all, I'm going to preface this by saying that every investor has its own criteria. So you're going to hear different versions as to what they look for. What we look for specifically are, we have so many members that each one of them has a different background, and each one of them is going to be looking probably at different things. But in general, if I'm going to summarize this, David here mentioned execution is everything, so that speaks of the management team. We want to see a management team that's, hopefully top-notch. Hopefully they've done it before. If they had some previous exits, that means they sold the company, with great returns for everybody. That's even better. It is most often wishful thinking because most entrepreneurs don't have that experience. But so it's management team. Then the idea has to be solving a critical problem in their target segment. So it can be a Me Too product. It has to be something that's so unique, hopefully disruptive. It's going to change everything around, which is going to give them an opportunity to succeed. Then it has to be in a large enough market so that if they don't capture a large enough market share over the years, if the market is big, there are still some significant revenues that are being generated, which drive the valuation of the company for exit. The last thing is it has to be an idea that it has enough sufficient barriers to entry. That means it could be brilliant, it could be disruptive, but if it's something that can be copied or emulated very quickly by, let's say, a larger competitor, they will lose that advantage and they'll be out of business. So high barriers to entry, I would say, would be the last general criteria that we look at. And this is probably very generic. It applies to almost every sector. Every sector has its own nuances and tweaks to that criteria, but that's I would say overall that would be what we look for.
What are a couple of things that you would just, when a red flag that you'd say, I don't want to touch this deal or this entrepreneur, with a 10-foot pole? Or there's some broad things, like sometimes, if a person, like, this is my business and I'm going to own it and I'm going to be CEOs, that gets people nervous, or unpaid taxes, or
Right. Well, that's an excellent question, because since during the initial meetings we don't know enough about the business. The entrepreneur always knows more about the business than the investor does, okay, because it's their business. We try to learn as fast as possible, and personally, I only invest in things where I understand fully and where I can add value. Angels and VCs are active investors, so we don't just want to, give them money and then, call them up 5 years later and say, "How you doing? Can we have an exit?" We normally in Golden Seeds take a board seat if we were the primary investors, and we shepherd the company through the process. Now, going back to the red flags, okay, I guess that would be one. If the entrepreneur wants to create a lifestyle business, that means a business that they're going to have like a job. They're going to retire on this, and they have no intention of growing the company, exponentially. And they're not discussing the possibility of an exit. then that's a red flag. The only way we get our money back is through the exit, or some sort of a process, whether that's a sale of the company or an IPO. So that's important for us. What else? If the entrepreneur is not coachable, let's say he's not strong in all areas, and nobody is. I mean, we know. So during the interaction, we may see a need for bringing somebody else on board to help him out, as COO or CTO, whatever, depending on his weakness. And if he's not open to that possibility, that's another red flag. If the idea is easy to copy, low barriers to entry, that we probably won't even look at it. We're looking in general at something that will generate about 10 times return over, let's say, 5 years as a reference. That comes to, if you do the math, about 60% IRR, right? And then you say, well, that's a great return. But if you multiply by the probability of success, I mean, let's say 1 out of 5 will be successful. That's about a 12% return. You can do that in, putting your money in the S&P 500. So, we're not making a lot of money. I mean, as investors, we're just doing this mostly because we enjoy the being part of this, exciting new opportunities here, and we like to, play along with them. So.
Yeah, live vicariously through the entrepreneur.
That's correct.
Good. Let me ask for each of the three alumni entrepreneurs, talk a little bit about the rewards and downsides of running your own show. What are some of the upsides? How many people here in the audience are interested in starting a business, being an entrepreneur? Okay, so why don't you talk a little bit about what are some of the rewards, the great parts about being an entrepreneur, and what are some of the downsides? Again, we'll start with Lenny.
So the great rewards for me, is the flexibility. It's the ability to do whatever I want, whenever I want. I want to go on vacation for a month, I could do it. I want to come to work late, I could do it. I want to, call all the shots, make all the decisions. I don't have to worry about someone else telling me, no, you can't do this. And really being able to see the results of my own labor, seeing the results of good decisions and seeing results of bad decisions. On the other hand, the drawbacks is it's very challenging. At the end of the day, as an entrepreneur, I'm responsible for everything bad that goes wrong. Someone doesn't show up to work, more likely than not, I'm the one covering. Could be on a Saturday, could be on a Sunday. So sometimes you feel like you're chained in and you're jailed and you can't run away because you're so committed to the business and you're emotionally committed. So maybe even though from the side it doesn't look like the best decision, or maybe at a certain point you should quit, you keep going.
So I guess for me, the thing that really, the plus side of being an entrepreneur is that it gives you this opportunity to actually reach out and touch the world, to actually impact and change the world. And I mean this in a really particular way. When I was in graduate school thinking about what I wanted to do, I saw these great companies doing this amazing technology research and development, like Microsoft, IBM. The things they have in their patent portfolios make a lot of the technology that we use today look obsolete. And I marveled at how almost none of this ever made it into products, even though there was, in many cases, very clear monetization strategies for it. And the problem was the companies that were really in a position to create these things were almost never in a position to be able to actually bring them to market. It would be too disruptive to their existing businesses. They weren't set up in a way to make spin-offs, things like that. And it was really devastating. The beauty of running your own startup is that it gives you this opportunity to take really transformative things. If you end up with one, it gives the opportunity to take something really transformative and bring it out, have it really impact people's lives in a way that would be almost impossible with existing businesses. The downside of that, though, is that the idea of reaching out that way, of creating something, of impacting people, is a very seductive one, and it can be it can really pull you into thinking that, gosh, whatever I have is really the thing, it's the best thing, it's the greatest thing. And, sometimes it really isn't. And the level of devastation that you feel when you've created something and you find people really don't want it as much as you thought, or don't want it in the form that you thought, is much harder than, you just work on a project and your boss tells you to move into a new project. It can become, even if you have a whole team of people below you, it really becomes part of you, I think, in a very deep way. The other downside is, very much like what Lenny was saying, the buck stops with you. There's no one else you can blame when things fail. There's no one else you can blame when things go wrong. And that's a really scary place for a lot of people.
I'll start with the negative stuff because there's more negative things than positive things. If you heard the song by Jay-Z, 99 Problems, if you want 99 problems, start a business. To be honest, it's not an easy journey. It looks like an easy journey, but it's not. Between the pressure, between the criticism, and then between people always trying to come out and challenge you and get you. I mean, you're talking about business, you're talking about money, you're talking about competitors. There's always going to be somebody coming for your head at any time. And when you're sleeping, there's somebody working. So you have to go to sleep knowing that somebody's trying to catch up to you at somewhere around the world. Dealing with different scenarios on a daily basis. I mean, all the problems come your way. You're the one that's solving the problems. You can't ask anybody for help, or you can't phone a friend like in Who Wants to Be a Millionaire. It's really your decision. And at one time you may be dealing with problems in accounting, problems in legal, problems in a client taking too long to pay. Then you have a payroll coming up. I mean, there's so many different variables in running a business that it really keeps you up at night. And that's why the journey is not an easy journey. And if you're going to do it, it's really committing your life to it. It's like you're marrying your business because there's no other way to do it. This isn't a 9-to-5 thing. This isn't one of those things that you can do on the side while you have a job. This is literally marrying whatever you're doing and being so obsessed with it that it keeps you up at night. Because any other way just does not work. On the positive side, it's your own world that you're creating. It's your own culture. Our culture in our office is a pretty loose culture. We have a lot of fun, but at the same time, we get a lot of work done. I can say that the people that work for the company aren't miserable every morning waking up and having to go to a corporate office. We've actually had people that worked at corporate companies leave and come over to us just because the company culture was so much better. It's your show. You get to call the shots. And it's what allows you to wake up in the morning and actually have a reason to wake up in the morning, rather than just being somebody who's working for a big company and just going on with life. So I would say that's the positive thing.
Good, thanks. And Carlos, you want to talk a bit about some of the highs and lows of the angel investing world, and maybe a lot of people at Pace study finance. Maybe your perception of how that might differ from a typical commercial finance type of a job. So some of the highs and lows with angel investing, and perhaps how that might differ from more traditional corporate banking type of work.
Well, first of all, I want to add to what the entrepreneurs said about their, the highs and lows of being an entrepreneur. The fundraising process is it's a grueling process. I mean, they're selling themselves out. They're putting themselves out every time they go up, in front of investors, and that must be very difficult. I mean, because more often than not, they will get rejected because the amount of money that's available is not sufficient to fund every company that's requiring funding. So that's something that's difficult, and I take my hat off, to those who do it, and it's my greatest respect. So it's not easy. In terms of angel investing, I mean, you're on the other side. I mean, you're analyzing, you're playing. I mean, angels play mostly with their money. We do have a fund, as I said, that's sort of like a VC fund. That's somebody else's money. So if I'm playing with my money, I can be a lot more flexible. If I lose it, it's okay. It was my decision, and I'm fine with that. When you're playing with a fund, that's a little bit more of a high pressure situation because they do expect a certain return, which was promised when the fund was developed. And if you're not, if the investments that were made with that money are not looking good. Some of the companies are going, out of business. Then it could be a stressful situation. But overall, I would say it's much more interesting than doing a day-to-day job in a financial institution, because you're always looking at new ideas. That hopefully will change the world, and so it's a fun job. It's not even a job. It's just pure joy, I would say.
So, and while you're on, let me just ask one of the questions that was tweeted in, and I asked you because of a technical background, and maybe Craig might want to comment as well. But one was a question about patents. How easy is it to get a patent or find a patent package? So maybe how easy is it to get a patent? And I would add, how valuable are patents really? I think people think that once I get a patent, I'm protected. Obviously, it has to be discoverable if someone's infringing upon it, and you have to be able to defend it. Yeah. But just to take a slight track from a question, again, if you'd like to ask a question, just at Pacey Lab. So something about patents, how easy they are to get, how valuable they actually really are.
It will depend on the sector. That would be the short answer. For example, in life sciences, it's extremely important. If if somebody's discovered a drug to cure cancer or Alzheimer's, one of our investments deals with that, as a matter of fact. It's extremely important. That'll give you protection for a certain amount of years, 5 to 10 years, I believe. So that by itself, if the patent has been awarded, will increase the value of the company. If the patent is pending, everybody says, yeah, that's good, but, let's wait and see it. In software, from what I understand, is not nearly as important. As a matter of fact, most software inventions are not patented because there's the fear that once you put it out, you apply for a patent, everybody else will be able to see it, and then it'll get duplicated. So depends on the sector, I guess. That's
okay, good. That's an important point. And I remember like Silicon Graphics, when they were a big player, they made a policy of not applying for patents for exactly that reason, that people discover them, copy them, and it's only going to be good for a couple of years anyway. And
correct.
Craig, do you have anything to add?
Yeah, so I'd add a couple things to that. So in the spaces that I've been, we've actually generally applied for patents fairly aggressively. And I can say people often do misconceive the value of a patent for a startup. Patent is kind of a long-term play. So first of all, patents will generally take about 4 years or so before they're actually accepted, assuming everything goes relatively smoothly, especially in software. In our case, the things that we're patenting are user experience things. So they're very visible to anyone using our product, and so we kind of, so the Silicon Graphics situation doesn't really apply to us. But they take a long time before they're approved, and in that meantime, anyone can copy you. So this is not a short-term way of providing a barrier to entry. What the patent does is it kind of raises the value of your business from the perspective of investors, and from a lot of investors we've spoken to, they're very concerned about our intellectual property situation, especially because our core IP is something that you can see in our software, and so they want to find out what barriers of entry, if any, we can create to that. The other thing a patent does is it helps you when you're going to be potentially going to be acquired. So for us, if someone infringes on our patent, even after it's approved, we're not really in a great position to enforce that patent. Patent enforcement costs is incredibly, incredibly expensive, and very few investors are going to want us pouring their money down the drain enforcing a patent. On the other hand, when Microsoft comes to us and says we'd like to buy you, then they can enforce that patent. That patent becomes really valuable for them. So patents can be very helpful. I would even say for software companies, but they're strategic things. They're not short-term ways of preventing your competitors from working.
A good thing. Great insights. Looking again for each of you, looking back at where you are now, and obviously different stages of development, but looking back now, what are some of the early mistakes? Lenny, I know you mentioned you had a lot of failures. David, you had some very rapid success. Craig, you're still in an early stage. But looking back, what are some of the things you wish you could have told your then self now? Some lessons. And again, as they may be helpful for people that are looking to get started.
To me, the most important, and it was mentioned earlier, the most important thing is in any business is execution. It's not the great idea, it's putting it into play. And execution happens with having very high quality people. So the mistakes that I made early on in business, we're actually celebrating our 10th year in 2014. So the mistakes were not hiring the right people and not providing proper training early on and not documenting some of the processes and procedures that we have at the company, to standardize the process early on to be more efficient in the future. And as the business grew, as the business developed, having to go back and fix these things.
So with us, I would say it's kind of, we followed the standard pattern a little more than was best for our company. So we spent months and months trying to raise money from angels and VCs when it was a very difficult time for us to do that because we were very, very early. And only after a long time of kind of being in this chicken and egg between potential customers, investors, and our product did we finally realize that it would make the most sense for us to just build the product ourselves in-house, then get some initial customers, then raise money. And that track has actually been working much, much better for us.
So some of the mistakes we made, especially being a young company, we made a ton of mistakes. So I'll just kind of give the lessons that we learned from it. One of them being don't trust anybody. Nobody's going to give you anything for free. There's always some sort of motive behind it. And trust me, nobody's as nice as they seem. So be very, very careful of the people you have around you, and be very, very careful of the people you take advice from, and also allow into the business as a partner or anything like that, because a lot of things change through time. So just be careful of the people you trust. The other thing I would say, in regards to mistakes we made, we didn't know much of what we were doing, especially having a media and content platform. So with the content, we made many mistakes early on. I remember we didn't even have an editor, so there was a lot of mistakes within the content. We would hear a lot of complaints about. But the biggest lesson from there is that don't be afraid to make mistakes. Everything we learned was from trial and error, and it was really just throwing darts on the board. And the other lesson basically that bridges off from this is whatever rule book anybody tries to give you, throw it out the window. It usually has nothing to do with anything you're doing. The only way you're going to be able to execute is by literally constantly trying with different darts and throwing them at the board. And eventually you'll realize the ones that are flying right and sticking right, and those are the ones you base your formula off and execute off of. And then the next thing is people. I mean, people is incredibly important. So your team is everything. Your team is your backbone. Your team, you're not going to be able to do this alone. It's impossible. So you're going to need that strong core behind you. And it's important to find people who are like-minded, because we've made the mistakes of bringing on people that weren't like-minded or overqualified, and whatever the case may be. So it's extremely, extremely important that they fit in, as well as also believe in the product. Because at the end of the day, as a startup, you're not looking to motivate people with money. You're looking to motivate people with the dream of this turning into something big. So understand the people that are coming to you looking to be there for money, and the people that are looking to be there for a long time. Because there is a distinction, and the ones that are going to be there for a long time are the ones that are going to help you grow this business. The ones that are just doing it for money, that's just their intrinsic motivation. They'll be there from 9 to 5. But starting any business, it's a 24-hour job, so you have to be ready.
Good. And Carlos, there's a question that was tweeted in specifically to you. As an investor, what are your views on non-technical co-founders working on technical business or technical-based businesses?
Okay. Remember I mentioned earlier that CEOs come in all different sizes and shapes, and in the case of a high-tech venture, there's a requirement for somebody to take to be a technical lead. If the CEO doesn't fill this role, then we'll have to either he or she will find a CTO. We'll have to find it for him to make sure that the company succeeds, because execution, is really the what makes it gonna work or not.
Do you want to see that person as like a founding member of the team as opposed to a hired gun?
There's some flexibility there, and that will depend on who is investing. Different companies, different investor groups have different criteria. Some of them require the team to be ready the moment they're presenting they're delivering their pitch. Others are more flexible and they say, well, we have during the due diligence process maybe, or upon funding even, we can start searching for a highly experienced CTO to complement your skills.
Let me ask you especially about that last part. If someone has a technical business, not super highly technical, developing something like Craig did, but even just an app or something that requires, a lot of coding, right. And they both, just had a business background and said, or both, if there was 2 or 3, whatever partners, and said, well, if you invest in us, when we get funding, we'll hire someone technical. Is that something that's acceptable at all, or you want someone that, is part of that team, or, they've shown that they could really make some traction as opposed to give us the money, we'll hire somebody good?
Okay, we're forgetting one thing though. We invest in Series A type of investments. By that time, there has to be a product at least in beta phase. So who developed this highly technical product? It couldn't be a couple of MBAs with no technical background, right? So either they bought the idea or the CTO, whoever developed this, left. I mean, that would be kind of strange. That would be probably, normally it's somebody technical. We see a lot more technical people that develop, let's say, an app or whatever. We don't do much in terms of apps, but I mean, they develop something, a product, technical product, and they don't have the business skills, rather than the other way around.
Okay, right.
For the reason that I explained, the product has to be almost ready to enter the market, right?
Okay, so for those that know, there's seed funding when you when you start at the very, very beginning, like put a seed in the ground, see if it'll grow. Series A is, once you're trying to, scale up a business, you have a working model and you're looking for, funding to scale it up more. So let me ask a question, since we're at a university and there's a lot of students and you're alums of this university, looking back, what are some of the things a college, not specifically Pace, but any college or university could do better to prepare students for entrepreneurship? When I say entrepreneurship, it doesn't just mean starting their own business, but being entrepreneurial, whether they want to work as a solo practitioner, start a business, work for a small business, work in the space of entrepreneurship. But what are some of the things colleges and universities could do, both curricular, like the types of courses and what you do in the course, extracurricular, like activities like this, or even co-curricular, like the lab that is meant to support students studying as well. So what are some of the things, I guess an easy way to say it is, that you wish, Pace or any college would have offered you at the time?
So in business, a lot of success depends on other people outside of your company. Suppliers, trading partners, service providers. And it's very important to have, good personality. It's very important to have good social skills where you could interact with those people and you could negotiate well. And, I actually think from what I remember from Pace, it did an excellent job. Tons of extracurricular activities, lots of opportunities to practice meeting people. When I was in Pace, I spent a lot of time in the student government and different student clubs, and there were a lot of guests, there were a lot of speakers. There were a lot of, I remember there was a executive in residence program, and at every single one of those events is an opportunity to meet with someone, to network and develop your social skills. So I think the best thing that universities could do, that could offer, is to create more opportunities to meet people who are not professors, people outside of the college, outside of the university, who are in the business world. Create more opportunities for internships to give people an opportunity to work at different companies. Everything to develop soft skills, because a lot of time is spent developing, hard skills. I'm going to learn finance 101 or accounting 101, and I'm going to know numbers really well. But the real key to success is being able to communicate well, being able to listen well, and just facilitating that's critical.
Great, thank you.
So I'd say there are a couple things. One is they could surround. It's good to surround students with people who think about the world in a business-oriented way. Like if you go out to Silicon Valley, one of the striking things is everyone you talk to, every conversation you have, everywhere, everyone's talking about opportunities for business. They're talking about the little gaps, the little market opportunities, the little clever ideas, and how they could monetize them. It's really just part of the culture out there completely, but in the rest of the country, it's not. And when you go through school, you think about things like, okay, you know, what are my solutions to engineering problems? What are the best strategies for studying for a test or writing a paper? But it's really a whole different way of looking at the world to start thinking about business models, business opportunities, and things like that. And just having everyone surrounded by people who look at the world that way, to some degree at least, would be really helpful, at least for someone like me. And also, similar to Lenny's comment, I think it's getting opportunities to think about how to work with people, not just those outside your company, but those inside your company. How do you delegate? How do you organize a complex project involving a lot of people together? I know when I got out of undergrad, I had, you know, almost everything I did was one person working on a project by themselves. You know, figuring out how to build a team, lead a team, assemble people, give them a shared vision, anything like that was really not something I felt like school really gave me.
So most of what I personally learned in business was mostly through experience, not school, and not blaming pace. Just saying, I think all curriculums in colleges and universities right now are flawed. It's an old way of teaching young people. It's a way of teaching us in the way we don't want to. You know, you make us do 2 years of arts and sciences and general stuff that we have no interest in, then only in our last year do we really study what we actually are supposed to be interested in. The whole system in general is flawed. I'm a big believer that trade school is going to be something of the future, where you just pick one concentration, and there's a certain time period that you need to study it, and after you're done with it, you're pretty much, obviously you're not going to be an expert, but you've had enough knowledge in that field. The other thing is computer science and development and coding. The fact that it's not a requirement in most of the schools across the country right now is a little bit of a joke, especially with the way the world is going. The computers and technology is taking over. So this is one of those things that everybody at least should have a basic knowledge of how to do it. The other thing is more events like this. I wish I went to more things like this when I was in school. Can actually learn a lot from them. So more things of this nature, bringing in entrepreneurs and just having them really talk about their experiences, because you're going to make mistakes. You're going to fall 100 times. But if going to one of these things, you fall 98 times because you heard something here that helped you, it's one extra night to sleep better. So just think about it in that nature. But in general, just think the whole really curriculum is flawed into making students doing what is considered right rather than letting them do what they should want to do.
Oh, and that's changing quite a bit, and it's changing because they're being forced to. There's a startup called Institute, like Institute but with an E, and they're right downtown here in Manhattan. And the idea, it's kind of an alternative for college for people that learn differently, and it's focused around an apprenticeship, kind of like what old is new again, not an internship but an apprenticeship, and they are very selective and match people with some of the top CEOs of the top tech companies in New York, like working with Hillary Mason at Bitly. She's not there now. And I'm involved with them. And what's interesting is it was started by two people, Kane and Shayla. Shayla's a Harvard MBA, and Kane dropped out of PACE because he wasn't learning what he wanted to. And Shayla, when she was hiring, even as a Harvard MBA, said that, she wasn't getting people she needed, and she wanted more people like Kane. And they started this to be getting a ton of press. And like I said, I've been, happy to be associated with them, have them, work at the lab and do a few things. And the model's changing because it has to change.
Yeah, I actually know about that program. I know that somebody who's in it that works at Thrillist.
Ben Dar.
Ben. So I know Ben, and he's been telling me it's an incredible program. Learns way more than he learned at school. The other thing I would say is that the other thing about curriculums and universities and schools, obviously the price is quite high and it's going to keep going high, but the value is exactly the same and hasn't changed through time. So that's going to be something that you'll see, students or families realizing that, hey, there should be some sort of alternative here, because we're living in a world right now where it's not easy for young people to get jobs even with a degree. So in general, the whole system is not correct. And the other thing is, when you're running a business, right now you're learning accounting, finance, and all that stuff, you're going to be hiring people to do that for you. You're just going to be running the show. So you're not going to be able to be doing accounting, finance, legal, all that stuff by yourself. So just keep that in mind. You're going to be able to hire experts to do that for you.
So, yeah, and if you want to see more, if you go on YouTube, just look at Inside Institute. Forbes did a really nice special on them, and I appear at the end of it. But a great program. And the other part with the value, of the degree in changing education, there's this whole concept of flipping the classroom, and it's affecting elementary schools. I get calls from school districts, to teach about how can we instill more entrepreneurship, even in young, K through 12 programs, primary, secondary school. And colleges are realizing you can't, charge this kind of tuition, have people graduate and not, be able to get a job. And one of the people who started turning education a bit on its head, Sal Khan from the Khan Academy, if you heard of him, he came in and spoke at Pace. He's a friend, and he's just doing some amazing stuff. So just the way, healthcare probably isn't sustainable and the model's going to change. I think education will as well. Carlos, any thoughts on that? What you'd have liked to have seen at somewhere like a Stevens?
Well, I mean, I would say that entrepreneurs are a unique class of people that are able to deal with adversity, lack of stability, rejection. And those skills are kind of I don't know how you acquire them through, formal education. I think you either one day decide that's what I'm going to do, and then I'm going to do it. Or maybe, I don't know, it's part of your DNA. I'm an advocate of some sort of an entrepreneurial boot camp where they put you through the paces, and by the end of the day, you decide whether that's, you're cut out for it or not.
We just put in we received a grant proposal to train military veterans on entrepreneurship, and the title was an entrepreneurship boot camp, through Blackstone. So we'll see if we get that and provide a boot camp for those entrepreneurs. And just a side note on Pace. Pace actually does have a lot of entrepreneurship in its DNA, not as a commercial for Pace, but the two brothers that started Pace actually came out from Ohio, recognized a need for business education back in 1906 when Pace was founded. You didn't go to college really for business. You went for the liberal arts. The only professions that you would study is really law and medicine. And they recognized the need. They borrowed $600 to rent a classroom to start teaching business, mainly around accounting and law subjects. When they couldn't find books, they wrote their own. They recognized the need after World War II, the GI Bill for education, and Pace was cited in the book Innovation and Entrepreneurship by Peter Drucker as one of two entrepreneurial colleges in the United States. And our entrepreneurship program actually was formally established in 1979 as an undergraduate concentration. It'll be celebrating its 35th anniversary this year, making it one of the earliest in the country. So I do think we have some good entrepreneurial DNA, here at Pace. Let me ask a question. You talked about, the need for people. Talk a little bit about finding talent. It's often hard for a startup to find talent. I mean, when you've got competitors, Google and Facebook, or JP Morgan Chase and Goldman Sachs looking for talent, it's often hard to find and attract them. And then when you get them delegating tasks, it is hard to trust people. We heard that. So, how do you find talent, attract the talent, train and retain the talent, and then be able to delegate and trust them? So if you could talk a bit about that. And, again, Craig, I know that at an earlier stage you might not have encountered all that, but certainly have some partners. But Lenny, can we start with you?
Wow. We ask the same exact questions ourselves every day. How do we do this stuff? I don't have a good answer. It's very difficult. Probably if I had to list the challenges that we face every day, this would probably be top on the list as the most difficult. Our strategy for recruiting, we recruit from schools, we recruit from PACE. We recruit interns that sometimes turn into full-time jobs. We look for people on career websites. Sometimes we look for people something as simple as Craigslist. That's the first step. It's finding the people to call you and to apply for the job. A lot of people don't read the job descriptions and apply, when there's a clear mismatch. So first, it's the pre-screen process, getting people who have the requirements to apply. Then talking to them to make sure that they have the passion for the job, that they're excited about the job. They're not just, looking to make a few dollars and then in 2 years they're going to leave and work somewhere else. Beyond that, really testing them to make sure that they know all the things that they say they know. Because, there are studies out that say like 80% of people lie in their resumes. So we have testing in place to make sure that at the very least they meet the criteria that we have. Once they're hired, the next step is training them. And I mentioned earlier about not having good processes and procedures and not having good documentation. This is something that a lot of startups face with, because when you're building a startup, you're thinking about growth, you're thinking about getting your product to market. You're not necessarily thinking, let me document what we're doing, so once we hire someone, they know what the steps are. And a lot of times it doesn't make sense anyway, because things are so fluid, and in a startup environment, things are changing all the time. So you have to train the people to do the work. And then, you start delegating the work. A lot of entrepreneurs are control freaks. They're afraid to let go. They think no one else could do the job. And there's a good chance that, the people who you hire might not be as good or as smart as you are. So you have to proceed with caution to make sure they don't mess anything up. So you delegate slowly, but at the same time, empower them to make decisions and empower them to make mistakes. And then retention is a key motivator, because as, the world changes, as the demographic of job candidates changes, traditional, carrot and stick kind of reward models don't necessarily work. So you have to create a good work environment. You have to make it interesting and exciting. It's not always driven by money. You can't always pay someone more money than everyone else. That's going to guarantee that you're going to get that person. So you very much have to think about company culture and creating the kind of environment that facilitates people being excited and motivated to come to work every day.
So like Bruce said, we're very early. We don't have that level of experience. But I can say, as a very early stage company, trying to get those first couple people that are really going to help you get to the next level is extremely, extremely hard. Probably the hardest is getting engineers. Any of you who've been involved in startups, I'm sure, see this all the time. Getting serious senior engineers who actually know how to build, whether it's a piece of software or hardware or whatever it is really hard, because you have everyone from Google to IBM, especially in this area, to Facebook, to everyone trying to get these exact same people. Now, in your favor, some of these folks kind of like working at startups, but against you, your competition has way more money and way more perks and free massages and free lunch that you just don't have. So we found that just to be incredibly hard. Getting people like marketing people, business development people is also difficult, but I feel like the challenge is a little bit different. There are plenty of these people floating around. Some of them even have some money and would love to get involved in a startup. But there you do run into the problem of these people are way older, or in many cases much older than you, much more senior than you, and kind of feel like they should be running the company. And I've actually had that where, I was coming very close to bringing someone on. This person asked for a frighteningly large percentage of the company, and then it was very clear this person thought they should be the CEO. So it's very hard to then walk away from someone who you really need, but you also know they're going to disrupt the company and actually cause you more problems than they solve. And so I don't really have a solution, just, network a lot, go to lots and lots of networking events, meet lots of people, and keep building that network, because ultimately, at least in my experience, that network is how you'll get those first couple of people that really help you get up to the next level.
So the truth is, you're not going to find talented people in the beginning. You have to build it up to something that seems pretty cool so that the talented people become attracted. When we started this, it was literally me, my co-founder, his little brother, and his brother's friend, both of which never even went to college. So it's really, you really have to start bare bones, and you have to be willing to, you got to get the go-getters. Anybody we've ever hired, we've never looked at resume, we've never looked at a GPA or what their test scores were. What we look for is heart and people who are go-getters and hustlers, and that's the way we built this company, is just on the foundation of, hey, we're all young and nobody knows what we're doing here. But I think if we all work hard enough and go in the right direction and all believe in it, something's got to give. And it wasn't, getting a developer, the hardest thing. I mean, our first developer was a buddy of ours that had 2 left hands and didn't even really know how to code. Our site couldn't even handle like 30 concurrent people at one time. Then our second developer was a freelancer that we were paying like $30 an hour for, also horrible. We didn't hire a CTO until 1 year in, who's still currently our CTO now, but he left AppNexus, which is a giant advertising platform company, and he was looking to join a startup, somewhere with a cool company culture. And obviously still at that point we were quite small, but at least we had the company culture, and at least we used the raw talent as much as we could to build it up to look like something could happen to attract the talent. Because at the end of the day, unless you're the guy who started Instagram or the guy who started WhatsApp, talent's not coming your way. There's, those guys, obviously, they just sold their companies, and, they're going to get the talent very, very easily. But first-time entrepreneur, a lot of people are going to close the door on you just because they're not going to take the risk on it. So get the people that are willing to hustle with you in the beginning, build it up, and then eventually you'll be able to attract talent based on what you currently have.
A lot of the, one of the benefits for a college, again, I'm not a traditional academic and not just here to say college is the be-all and end-all, but one of the good, really good things about college is that network, being able to find them. There's a reason a ton of startups come out of MIT and Stanford, because you're networking with all those people, and Caltech and many others. But that's a network, and it always has been. From the term the old boys network or the Harvard old boys network, there is something very special about being able to leverage your networks in university. And PACE, don't forget, we have the Seidenberg School of Computer Science and Information System, and we have I think 130,000 living alumni, 80% of whom live within 100 miles of PACE. So, leverage your networks. Let me go. I'm going to ask one last question. It's actually from Twitter, and then we'll open it up. Well, just before we open up, I'm going to try something different that I saw at a panel that I thought was a neat way, and that's to have the panelists ask each other a question. So Craig may want to ask a question of David, or someone might want to ask Carlos about getting funding, but I always thought it was neat to have the panelists be able to ask each other a question, and then we'll open it up and pass the mic around wherever that wireless mic is. But one of the questions came in is about business plans. This was from Nina. If you made a business plan, how has it helped you or not helped you in your startup? So, I do teach a course in business planning here, and as I said, I've had several startups. One I had a business plan for, one I didn't. It doesn't mean that, if you have a business plan, that's good. Sometimes having a business plan might keep you too focused and not see opportunities. These days business plans are being considered a little bit passé, that, you don't really need them now. Then there's another lean startup thought that, just get the minimal viable product, get it out there right away and get feedback, or this business model canvas is another new neat iteration that I like. So with that, basically, did you have a business plan or not? And whether you had one or not, was it helpful or not helpful? So there's 4 possibilities, right? Either you had a plan and it was helpful, or was you wish you didn't do it, or you didn't have a plan and you're glad you didn't, or you wish you did. So, Lenny?
So our company is self-funded. We started with $1,500 10 years ago. So we never went for outside money, beyond traditional bank loans or bank credit lines. So we've never needed a business plan to show to anyone externally. What we did do is, we've drafted business plans and we've updated business plans, with the idea that eventually we will go and get outside money, or maybe as a roadmap for us in terms of how we should move forward. But in practice, we never use it. In practice, it was probably a complete waste of time. Simply, things are changing all the time. You have one idea, you think you're going to do things one way, and then you wake up one morning and you're doing things completely different. And that's, startups, that's what you do. That's how you make, that's how things work in a small business. At the same time, I'm a firm believer that it's a good idea to write things down, to get your ideas on paper. And you could hold yourself more accountable when you write things down as opposed to keeping them in your mind. I don't necessarily think that business plan is the best format, though.
So when we started, we didn't have a business. We didn't start with a business plan. We really were going straight lean startup kind of strategy. And as time went on, some of the investors we were talking to said, they not a business plan per se, but they wanted financial projections. And to put those together, we ended up having to kind of flesh out in a lot of detail how we were going to take the business forward, how much we were going to spend on this, what exactly our hiring plan was going to be. And that has actually been really valuable for us. But not because we're actually following it, right? Like I think General Patton said, plans are worthless, but planning is invaluable. And we found that to be really true. Like having this sort of benchmark of what our expectations are, what we think is going to happen, is good because when things don't go that way, we can say, oh, okay, we're going to have to hire this additional person, so we're going to need this much more money. Not if you think of the plan as a roadmap, it's bad. If you think of the plan as, a personal internal reflection, kind of like what Lenny was saying, for getting your assumptions down on paper, thinking through what your requirements are going to be, and getting at least a sense of where the business could go in different paths and different opportunities, that I think is really useful. But as a note, if investors come to you and start asking for your business plan and they expect like a 10-page packet of papers, you probably should reconsider having them as investors.
We never had a business plan when we started. Just wasn't something we were up for doing. Our whole thing was, hey, let's just start it and see what happens. We didn't even have a bank account when we started or incorporated a company. It was just, hey, let's see what happens. It wasn't until like 3-4 months in that we say, all right, we need to incorporate the company and get a bank account. But to me, business plans are bullshit. I mean, you can't predict what's going to happen. You can't forecast what's going to happen. Tomorrow, the internet might get unplugged and there goes your business, and then your business plan isn't ready for that variable. So obviously it's something that investors love to see. It helps them sleep at night better when they know there's some sort of plan in place. But with us, I mean, we've never never relied on a business plan. We had to put one together recently because we were entertaining the fact of raising money, and obviously all the investors wanted to see it, just use of funds and all that stuff. But it's not something we go by. We know where we have to get, and we know how we have to get there. And we know where to spend money, where to not spend money, and how to hire. I mean, we've done this on a very lean basis, so we understand the value of money. And some companies are overfunded and they can spend money on whatever they want, whereas we make sure for every dollar we're putting into something, there better be a return.
Carlos, as a investor, you want to talk a little bit about, do people still just automatically ask for a business plan as kind of a perfunctory matter, and does it really matter that much?
We're not going to get in the middle of this. It's become a religious conversation, right? To business plan or not to business plan. You have to have a way to tell your story when you're trying to raise money. How you do that, that's entirely up to you. But you got to be able to tell the complete story. Otherwise, nobody's going to sign a check for you. Now, you can call that a business plan, or you can call that an investor pitch. You can put it on a napkin, as long as the whole story flows and it's coherent. And and so we need some sort of a story.
I like that. It's
right?
Telling the story. Maybe in the future they'll be done by video presentations or just PowerPoint, or different forms of a business plan. But
because I'm surprised when people say the business plan. I mean, I wasn't aware that there was a standard format for. You got to cover all the aspects of describing your business. That's there's no established format. I mean, you can do it any way you want, as long as it's convincing, it's persuasive, and it makes it look like you know what you're doing, because otherwise, hey, if you come to me and you say, well, tomorrow I may change all of this and decide that, I'm going to do something else. They'll say, well, maybe we should wait until tomorrow, right? Yeah, before you get funded. So there's got to be, I mean, let's face it. Entrepreneurs are serious people. They have a vision, and we want to hear this vision and how you're going to achieve, the steps required to get to the end. And that could change. It's dynamic, and we accept that. But at least, share your vision with us.
Okay. Good. So let me, just before we open it up, and we're right on schedule, little non-traditional, but it could be interesting. Question for Lenny, any question for anyone from either Carlos as a potential investor, Craig with some technology, David with rapid growth? Fire away.
Yeah, I actually have a question for Craig. I'm curious in a very early stage environment, before you have a product, I'm wondering about different milestones that you have. Obviously, you have a limited amount of money as opposed to an unlimited amount of money. So, do you set milestones saying, we got to have a product in 6 months? At what point do you say, I want to go out and raise more money? Is it something that you're always thinking about, constantly trying to raise more money? Do you have an end point where you say, look, if this product is not viable, if it's not successful, this is where we quit? So how do you think about these things?
That's a good question. So I think especially for an early stage company, thinking about milestones more than a couple of steps out doesn't really make a lot of sense. So we kind of think about the next couple milestones are, we're going to partner with company X, with a company in sector XYZ. We're going to raise this much money. We're going to get the product done. And of course, none of that happens along the timeline that you expect. None of those milestones are met when you expect they will be or how you expect they will be. And so you constantly have to be dynamically revising them. This is the whole thing about the business plans, right? This is why I feel like it's a useful thing to have to gauge yourself against, but it's not useful at all to follow because you can't. Reality doesn't follow the business plan. So for things like raising money, we were expecting we'd raise all this money, then we'd go build a product. And, then it was like, yeah, that's actually taking much longer than just building the product. So we're going to completely change everything around and build the product. And like, when do we fail? When do we, what's the fast failure point? Truth is, I don't know. For me personally, I would say once we have the product out there, I would not want to fail without the product out there. If we put it out there and it doesn't work, that's one thing, but it would seem like a real tragic thing to fail without even getting your product out, from my perspective.
Good. And Craig, if you had a question for one of the panelists.
Yeah. So actually, David, I was wondering, your rate of growth was really incredible. How on earth did you spread the word fast enough? How did you get so many people to see what you were doing that quickly? What was your marketing secret, or what was your insight?
So the biggest thing for us was social media, obviously. With social media nowadays, you can get a lot of things out there a lot quicker. Whereas back then, when you started a business, you needed a marketing budget, you needed to spend a lot of money on PR and get the word out. I mean, with us, the product really sold itself and the content really sold itself. And you can say those two things kind of came together. And I mean, when somebody shares something on their Facebook feed, 65 to 60% of our traffic comes from Facebook. So that's really our real estate. That's where we are, and that's where the people see our articles, and that's where they come in and read the site from. So really, social media has enabled us to spread the word as fast as we did, and social media will constantly allow more and more people to spread the word about their businesses or industries, wherever it may be. Just because when the product sells itself, it's all left to the social world to do its job at that point. So you could just say right time, right place, right content, right demographic, and just kind of right science behind what we're doing.
And don't discount luck as well. I mean, you've got to be. Everyone, even the founders of Google, they said, if we started a couple years early, we wouldn't have been able to do what we did because the price of storage was so much higher. The price of bandwidth, transfer was exponentially higher. Someone just phoned me something with Facebook. They slightly tweaked the algorithm for what shows up in people's feed, and Upworthy, suddenly went downworthy, pretty quickly. So There's all kinds of things. I mean, but with luck, the harder I work, the luckier I get. It doesn't mean you just sit back and wait for luck, but you've got to work hard, and this, sometimes it's.
I mean, I have a theory on luck. A simple equation of luck is hard work plus opportunity equals luck. And that's really as simple as it gets.
No, there's the guy who wrote the last lecture. He's a professor at Carnegie Mellon, Randy Pausch. He said that luck is the intersection of opportunity and preparation.
Yeah.
So.
And the other thing is right place, right time. I mean, I remember my first PACE professor in my first class told us a story about right place, right time. So it really does come down to all those different factors coming together.
How about a question?
A question? I actually have a question for Lenny. How, with the furniture business, obviously it's large products, and it's, if somebody's buying a piece of furniture, they're committing to it. Any struggles with selling furniture online? Because you can't test it out, you can't really sit on it or feel it. Is that one of the things that's getting easier over time, or?
So for sure, it's a challenge because people can't see the furniture, but in general, people are getting more and more comfortable with e-commerce and more comfortable just buying things online. And 10 years ago was lots of small items. Now it's very common to buy large items like, jewelry or furniture. So people are very much used to it. A big challenge for us is the logistics of shipping around big, bulky things. So think about if someone lives in North Dakota and they buy a dresser, you can't just give it to the UPS guy. You have to figure out how it's going to get there. And if you could imagine, it's very fragile, like, things that have glass and mirror. So you can't just let someone take it and throw it around in the back of the truck. We actually, our supply chain, we consider it a competitive advantage. It's very complicated, very, very tough part of doing business.
Got it. And in regards to price point, what's the average price point of a piece of?
So our average order value is $2,300. We concentrate on higher end furniture simply because of how expensive it is to provide the delivery part of it.
Yeah. Nice.
Carlos, a question?
I have a question for all of them, I guess. Where do you see your company in 5 years?
It's kind of crazy to think about, what's going to happen in 5 years. We think in much shorter time frames. But what we do, our company started in a traditional company sense with physical stores and physical locations and lots of inventory. And now 80 or 90% of our business is online through our e-commerce platform, and it's powered by technology. We spend more money in technology than we probably do on anything else. And where we see ourselves in the future is becoming much more of a technology company and selling our software as opposed to selling furniture as a product.
So anyone at my stage who has strong thoughts about where their company is going to be 5 years from now is probably a little bit delusional. But that said, I think it's important to have a vision of where the company potentially could be. And for us, that's that we're going to be a broad platform, that we're going to move well beyond individual products and individual services and provide a broad, coherent platform that really owns a significant sector of professional and academic knowledge work.
So this is a very investor question to ask. With us, it's. I think the right question is where do we want it to be, not where we see it, because anybody can say they see it going anywhere, and that's as big as it gets. With us, we see things day by day, and we take things day by day because that's what you have to be able to do. You got to be able to handle every day's problem, every day's solution, every day's win, every day's loss. You have to understand all that on a daily basis. In regards to where we want to be, we're swinging for the fences. As an entrepreneur, you want to swing for the fences. So we want ourselves to be a big digital media company, created by Generation Y, online, and really turn into a big media company. So that's our want.
Good, thanks.
So with that, let's open it up exactly on time to the second to the audience, and we'll pass around the microphone. If you would just raise your hand. All I'd ask is you You can say who you are, but please make sure you ask a question instead of make a statement, and who you'd like addressed to. Are there really no questions? Yeah, okay.
Adam Schaefer. I attend PACE, but I'm also an entrepreneur and really an independent consultant working with small companies of late. We brought up the issue of a business plan. Was curious to know similar concept, but sometimes from a different perspective, entirely different approach, strategic plans, especially for companies that are growing. I would imagine that especially entrepreneurs, when you're dealing only with yourself or a co-founder, you're talking about the business all the time. Strategic plan is kind of innate. Do you use strategic plans, especially when you start building on employees to enhance internal communication? Do you find them, similar to the business plan concept, useful, or do you go entirely off script?
So as a CEO, I always want to make sure that all the managers know what they're doing. So we require for every manager for their department to make one strategic plan for the year. And it's something that we hold them accountable to. So we could go 2-3 months into the year and we could say, hey, this is the strategic plan that you presented in January. Are you executing on the things that you said you would?
We're a little too early to have anything intelligent to say about that. I'll pass it off to David.
Strategic plan, we call it roadmaps. So we create roadmaps for each different division of the company. So tech will have their own roadmap, business development will have their own roadmap, video will have their own roadmap, and as well as content. And these roadmaps are usually on 3-month basis. So we don't do full year, we just do 3 month of what you would see yourself execute, your division executing within those 3 months. We do definitely use them. It just helps us, when you get to a certain size, you're not sitting in the same room as your co-founder anymore, and you're all over the place. It just helps everybody be on the same page. The other thing that we do that we find actually quite helpful is that we have committees. So we have one committee that meets once a week, and it's mostly the heads of the division, every division. And it's just really one of those things where we all get together and like, hey, here's the problems, here are some solutions. What do you guys think about this? What do you guys think about that? And it just keeps us all aligned rather than different extensions of the company.
So should we rename our business plan development class to roadmap development class, and then you'd be happy?
It's all about buzzwords. So roadmap planning.
I think we have a
401.
question here.
I have a question for all of the panelists it's a legal question. I'm wondering about advice for people who are solo entrepreneurs. So for freelancers or consultants, maybe when it's a good time to become LLC, because here in New York State, you're required to publish to become LLC. So is it maybe better just to use a business model and grow and then become an LLC, or start off as an LLC and then hope to grow? And then how often do you use lawyers is my second question.
So, the idea of entrepreneurship is, as I said earlier, it's much beyond just starting a high-growth company. As was mentioned, there's lifestyle businesses or smaller businesses, but also that idea of a solo professional, a contractor. And with the changing economy and the changing nature of work, more and more people are going to look to do freelance work or work on their own, or form a very small business, or do several part-time jobs, for example, contracting work. And one thing they may have to do is look to form a corporation. Obviously, the big advantage of a corporation is it limits your liability. The downside of a traditional corporation for a individual worker is that you face double taxation. The company had to pay tax, and then the individual had to pay tax when they took a distribution from the company. So basically, it's more of an IRS or a tax issue that they came up with things such as an S corporation. So your income flows directly onto your 1040 as individual income, and a more modern or a newer version of that S corporation is an LLC, a limited liability company. There's also things like LLPs, for professional corporations like, or a PC, professional corporation for like dentists or doctors or attorneys. Those requirements vary from state to state, so you'd have to look at New York's requirements. And there's several key components of them. So one is survivability, like if a partner dies, what happens to the corporation? There's implications if there's foreign owners, because they're not paying taxes, individual citizens, so they couldn't be. There's limits on the number of investors. There's voting rights. There's spreading losses. So I'm not a lawyer, but just to partially answer the question and to introduce the subject, it's a matter of limiting liability, of avoiding double taxation, and those structures have legal and tax implications. And when you get into things like LLCs or LLPs, that varies state to state, whereas like a Chapter S corporation is a federal thing. So I would suggest finding a lawyer to ask specific questions about your specific concerns, because there's 8 or 9 key components that determine what's called the business structure. And you could get some free advice, some free pro bono advice. You could do some easy internet search.
Well, I guess my question was about, do you start as an LLC or do you wait till later to become an LLC? Because I've heard different things from different people. So, and I'd like to know more about that.
So, like Bruce said, there are lots of considerations. I think the first question to ask is the kind of work that you do and the legal exposure. If there's a high risk of getting sued, then you want to incorporate right away so the corporation protects you individually from any liability. The second question is how much money you're making from whatever work you do. For a corporation is relatively expensive to maintain. There are filing fees, there are filing requirements on a regular basis, even if you don't have any employees. And simply filing a corporate tax return is more expensive than filing an individual tax return. So you have to have, a certain threshold in your mind where you could say, hey, maybe if I'm making $5,000 a year, it's probably not worth the expense. But if I'm making $100,000 a year, then it makes a lot more economic sense, to protect yourself and, properly account for various expenses.
Anyone else? And I only jumped in because it looked like nobody was leaning forward to the microphone. So any other thoughts?
I mean, to be honest, I'm not really sure. I mean, especially on if you're a sole business owner, I'm not too sure.
Yeah, I think, as Lenny said, and I've had that where I incorporated, if you have something to protect, do it sooner rather than later. And just for other people, generally where these come an issue is when the type of corporation you want, and why that decision matters is if you're going to go for outside funding, the old talk, and correct me, they all want a Delaware C Corp. Because if you started as an S Corp or an LLP, it could be difficult or expensive to change your structure. But if you're not looking for outside investment, you're looking to protect your assets. In other words, they couldn't sue you for your home or your savings, et cetera. Then it's a matter of which of the structures makes most sense for you. If you have something to protect, do it earlier. But again, it costs money to do that. There's fees like you have to advertise and file and have a secretary and an office. It could be at an attorney or otherwise. So I think it's a question that's best left to an attorney. So another question, why don't we take a couple more? Okay, Kamesh? Again, feel free to introduce yourself, and if you want to address it to someone specific, just let them know.
Sure. Hey, I'm Kamish. This is for Lenny. How is your process of getting your first few customers? Because that's the hardest part of the startup business. So how did you get your first customers?
So the easy answer is advertise. The first business, when we started our company 10 years ago, we literally bought 2-bedroom sets. We owned a truck. We bought 2-bedroom sets, and we advertised on Craigslist, and we said, hey, we're selling this bedroom set. Do you want to buy it? And 10 years ago, Craigslist wasn't as popular, so we were one of the few people advertising. More recently, as we build Bedroom Furniture Discounts, which is our e-commerce business, the first step was to build the platform, then build the database, load some products, and then once we had that ready, start advertising. Google AdWords, advertise on Bing. There are many outlets, there are many channels where you could advertise. I mean, we could probably advertise on Elite Daily, right? They probably have some sort of a advertising process.
Go ahead, Matt. You have a question?
Yeah, question. My name is Max, and I was wondering for you guys who started up companies, when you're on a budget, like you said, that there's a lot of people who you're not great at everything, and you need help with certain things to get your business going. How do you find people to work for you when you have no money to really pay them and you're just starting and stuff like that?
Well, there's two ways you could go about it. If it's somebody that's going to be with you for a while, and it's somebody really talented that you need and obviously you can't pay, then you can set up some sort of advisory shares or, incentivize them with shares of the company and obviously vesting. The second way is, you just have to be a hustler, man. You have to, tell people, hey, I can't pay you for 60 days, if you do this service for me or something like that. Yeah, it's all about understanding, how immediate the services that you're getting and also when you have to pay for it, because that's really the two questions you have to ask yourself. Is the service I'm getting worth it, and when can I possibly pay for it? And that's just really up to the way you negotiate with people and the way, people trust you. But the other answer is also, if it's somebody that's going to be around for a while, give them advisory shares, vest them, and all that stuff.
So I think it depends a lot on the kind of person you're talking about. For professional services like lawyers, they're actually often willing to work for deferred compensation, which I didn't realize this, a couple of years ago. It's actually pretty cool. For bringing on people like, if you're bringing on some senior person or whatever who has lots of cash and is going to be, providing some consulting to the company, oftentimes they would love to get a little bit of equity, get their fingers involved in a little bit, and they're kind of happy for things like that. The bigger challenge in my experience is when you're trying to bring on, especially like an engineer. They usually don't have enough cash that they can work for just equity. And so they need to try to kind of balance something out and just, like David was saying, you can make promises about, look, we expect to have money by this and this date, and here's what we're going to do, and we're going to compensate you for the fact that we're not going to be able to pay you for 60 or 90 days or whatever. But ultimately, a lot of it is really just understanding the needs of the person you're trying to bring on and figure out, how can you work around those needs until you can better provide for them.
Let me add something to this. Part of the skill of being an entrepreneur is knowing when you need the money and how to get it. Okay, so when you're starting out, you probably don't need a lot of money, so you're going to have to use your savings. And then there's what's called the friends and family round, where you go and ask your friends to invest in your company or your family, and you give them a share of equity. And that will keep you going for a while, and that you could pay some of the service providers who you don't want to bring in as equity holders or partners in your company. And then every so often, then you're going to need more money, and then you go to approach an angel or somebody who's got more money, and so on and so forth. And that's how a company is built. So knowing when to get the money, when to start looking for money and go after it is part of your job description as an entrepreneur.
Thank you.
And there's also a little bit the role of the entrepreneur as a leader, a leader versus a manager, a leader, inspiring people. If you could communicate your vision and inspire people to, do things they otherwise, wouldn't have done, which could be, working on your business. So I think the idea of a leader and being able to communicate a vision is another important component of being an entrepreneur, at least for a scalable business. Do we have maybe we have one or two more? Yep.
Hi, my name is Emmanuel. I'm a current senior at Pace University. My question is actually for all the panelists. I wanted to know what, in your opinion, do you need to see, what kind of structural changes would you need to see in the economy to really incentivize more individuals to become entrepreneurs, to take that risk, as opposed to going to seek product and looking for a regular job?
Let me just repeat the question for the video camera, or if you'd like to, it's what kind of major structural changes do you think we need to see in the economy to really incentivize or move people from traditional jobs to really looking for entrepreneurial jobs? Did I say that correctly?
Exactly, yes.
Okay, thank you.
So I'll take the first stab at it. I kind of have a theory about this. I think there's two things the economy can do. The first, it's New York actually just started this program called Startup NY. And if you get into the program, basically your company pays no city or state tax. Neither do any of your employees pay city or state tax. So it's really incentivizing the company. Obviously, you can't get away from paying federal tax because that's on a federal level. But it's really incentivizing people to start companies, knowing that they're not going to get these big taxes, and there's different ways, or your employees don't get taxed on it as much as they would if they work somewhere else. It's another incentive to bring them in. If they're making the same with you and making the same at somewhere else, it really comes down to the tax at that point. The other thing is, and I think really what the economy has to do is say, hey, anybody under 26 years old, we're not going to tax. This way, people who are coming out of school aren't under pressure of paying back their student loans or having to pay back any debt they got during college. And it gives them some time to really explore what else is out there, without having that pressure of making a payment on a loan and not defaulting and all that stuff. So I really think, that would probably be the greatest reform if they just said anybody under 26, we're not taxing. Whether they're an employee, an entrepreneur, whatever the hell they're doing, we're just not touching their money. I think it will give them a great head start. It's a head start that generations before us got, and we're not going to see Social Security. So why not, make the tables even for us.
So I would say health insurance is a big one. Despite all the changes that have been going on with it lately, there's still a lot of problems. There's still a much stronger incentive. There's still a lot of incentives to get your health insurance through through an employer rather than directly. And for people who are thinking of leaving an employer and doing a startup, one of the things, especially if they're a little older than 25 years old, is about the health care and mechanisms to give the same tax benefits to people who are buying health care individually that they would get through their business. I think that would help. Also, I agree completely with David's opinion about the taxes for young people and the New York program. I think that's great. I would also add to that, Georgia actually has some programs for when investors put money into early stage startups. It's any gains they make from it are taxed much less on the state level. And I think doing something like that on the national level would probably make a lot of sense too.
Neat. I was going to say, so the Startup New York, actually, the executive director of that program is going to come and speak at PACE next month because we'd like to have that. Right now, it's only open to SUNY, State University of New York, and CUNY, City University of New York schools, but we're pushing to get private schools accepted, and they are, I think, going to allow up to 150,000 square feet in Manhattan. So we're going to look, hopefully, to create a space, and it's a 10-year tax exemption as well. And with the healthcare, just to echo what Craig said, I see that, Obamacare is obviously a very politically charged thing. When it was introduced, I was interviewed by Computer World magazine, and the comments, I do a lot of press interviews, but that one got picked up by more outlets across the country. And the premise was that there are people at companies like IBM that want to create their startups, but are reluctant to go out because if, they get an illness, they could be dropped, or if a dependent has a pre-existing condition, they can't get health insurance. And this notion that startups are, all these young kids that don't think they need health insurance is wrong. There's more tech startups founded by people over 50 than under 25. The average age for a tech startup is 39 years old. And those people have families, and they're concerned about health insurance. So, I think that's both are very good points. And Carlos, you want to add something?
Yeah. One more thing that I think that's very important. Most entrepreneurs get discouraged when they go out looking for funding, and it's such a cumbersome process, right? So the availability of more funding sources would also help them kind of stay away from a full-time job and try entrepreneurship. There is an effort underway which is about to become, I believe it's a law, but it's not fully implemented. It's crowdfunding as part of the Jobs Act. There's still some issues though with the SEC about whether there's some details to be worked out to become widely available. These are going to be websites where you can go and get funding from micro investors and start your company, even if you need small amounts, hopefully with very limited paperwork and bureaucracy, and so that should help the entrepreneurial ecosystem as a whole.